All right, here we go. Here we go. Here we go. Here we go. Hello, everybody. Welcome back to another market open. Hope everyone's doing well. Camera quality, let me make sure. Oh, here we go. That's why it was bad. It should be a lot better now. Boom. There we go. Where is it? Hold on, it's coming. Should be coming. There we go. Boom. Hello, everybody. Hello. Oh, man. All right. We've got a lot to talk about. Richard, what's up? Guys, hello. Print Market Open Stream, hello. What's up? Damien Alvarado, what's up? David, what's up? Thank you all for being here. Kanki, we've got a lot to talk about today. Let's first go into the markets, but, well, actually, I want to go to this news first before we get into anything. And I want to talk about what's going on here. So we've got some big news. Adidas has terminated their partnership with Kanye West following the rapper's anti-Semitic remarks. Now, the reason this is interesting, the reason I wanted to talk about this is because Yeezy, the brand for Adidas, brought in about 10% of the entire Adidas revenue last year. That's about $2 billion off of $20 billion. That's a lot of money at the end of the day. But given what he said, Adidas has said they are terminating. So in a statement, Adidas does not tolerate anti-Semitism and any other form of hate speech. Ye's recent comments and actions have been unacceptable, hateful, and dangerous, and they violate the company's values of diversity, inclusion, mutual respect, and fairness. After a thorough review, the company is taking the decision to terminate the partnership and production of Yeezy-branded products and stop all payments to Ye and his companies. Adidas will stop the Adidas Yeezy business with immediate effect. So that means the shoes, the whatever it is, the shirts, the pants, whatever they make. The shoes are the biggest thing, but it's all completely gone. Adidas fell 4% in the morning, trading in Frankfurt, Germany, where they're traded on their stock exchange, and it's gone. So that's some pretty big news. That's Adidas is gone. And I wanted to highlight that just because I didn't think it would happen, to be honest, because I thought that I thought they wouldn't give up $2 billion of revenue because that's a lot of money. But good for them, man. At the end of the day, I think it's a good thing they don't care about the revenue and they actually care about probably doing what's right, which is stopping that. Just watched the video on DNA that was suggested this AM. Crazy stuff. Awesome. Javier, was that one of my videos? That's awesome. Good morning, DRK. No surprise about Adidas. Yeah, no surprise on that. What did you expect? He keeps doubling down. That's the crazy thing, bro. So Lex Friedman did a podcast with him. I don't know if you guys saw that yesterday. I did not expect Lex to do a podcast. And I mean, he just kept doubling down. Like Lex was trying to give him the opportunity to correct himself. He was like, nope. I'm going to continue to make my argument. And it's like, okay, buddy, if you're going to keep doing that, you're going to keep doing that. All right. What do we got on the market? We got Tesla 209 pre-market. Tesla hit 52-week lows yesterday. All right. So Tesla went to 198 and then it bounced right back up. So I guess people bought it as soon as it went to 198. I wasn't even near my computer to be able to do it, to be honest. So I didn't get the opportunity. But let's see. Let's see if Tesla can survive staying above 200 and see if that takes us anywhere. But that was very interesting to see Tesla just completely go inverse the market, because the market went up 378. The market is still up right now. We have not seen a decline in the market. I mean, the market was 350 on the low, 350 or 348 lows on the S&P. 348.12 was the low, and it has not gone lower, or 348.11. So the market's been staying steady. Meta is at 130. Now, this is very interesting, actually. Some thoughts on Meta. I want to pull up something. I was actually listening to the Meta shareholders call for Q2, and I was trying to understand a little bit more about the company position. What do you think of China imploding and the Tesla Gigafactory not doing very well over there due to lockdowns? I mean, I think those are those suck, but that's not a reason for to sell off Tesla at the end of the day. Long term, Tesla is obviously, I think, very, very, very a good bet, in my opinion. So Brad Gerstner, who is the managing partner of Alternative Cap, he wrote an open letter to Mark Zuckerberg. You know how Kathy Wood wrote an opening letter to the Fed? And oh, I didn't even tweet that I was live. Let me tweet that I'm live real quick. Wrote an opening letter to the Fed about like raising interest rates and stuff. He wrote an open letter, and the letter is actually pretty good. And I want to go through it more after the market open, because there's some really good statistics in here that I think are like important. Live market open. Let me just tweet this out. So after the market, after the we ring the bell, we're going to go through this letter. But there's some amazing stats. One stat real quick before I get into the market is that Meta has 4 times the amount of employees that it had since last year. Like they went from 20,000 to 85,000 employees, which makes no sense. It's like, why do you have that many people? And part of the reason is because they're a big tech company and they don't want startups to compete with them. So they want to hoard as much talent as possible. But the problem is your CapEx increases so significantly when you have 80,000 people that probably don't need to be there. So the letter is like calling to get rid of 10,000 people. And it's not saying get rid of them because, you know, they're worthless people. It's saying that let them go back into startups in Silicon Valley so that, you know, we can have more innovation because you're gobbling up all the talent. So there's a lot of stuff in that letter. I think that's very interesting. It's asking for a cap on the Meta investments. All that's the metaverse stuff, all that stuff. So we'll get into it. All right. October 25th. We have 6 days left of October. We are here. It's about to be November. So I hope people are excited for that. It is 9:30 a.m. The stock market in the United States of America is officially open. Wake your ass up. The stock market is now open. Let's get into some stocks. We have Amazon at 120, S&P 379, NEO 975. NEO fell really badly yesterday, but NEO's recovering a little bit. Meta 131, Google 103. Google doing a little bit nicely before earnings come up. Apple 150, Tesla 211. The market's green. We've got a green market. SoFi nicely above 524. DNA 259, doing better than it was at 240. Nvidia recovering nice to 127. ARK up 36. It's a green day. It's a green day. Let's hope it doesn't, you know, get pulled from us, but it's a green day. It's pretty green. There's not that much that's red. It's pretty green. Not bad. It's pretty green. So I guess the market thinks earnings are going to be good. Obviously, if earnings crap the absolute bed, then this whole market crashes. Especially if Apple does bad. Wow, look at Spotify. It was at 88. Now it's up to 96. Not bad at all. This is giving me a little bit of hints of like what it will feel like when we do have a bull market. You know, when you get a little bit of a nice little green day, you know, and then it's like it's kind of cool because when it is a bull market, we will see how either bad or good it ends up becoming. Obviously, when it's red, it's really red, but when it's good, it's really good. It's not bad. It'll be red again by 1 p.m. Yeah, that might happen. Today was longer bell than usual. It's like he was going to stop and then he gave another couple rings to mess with our. I always got to keep you guys off guard. That's the goal. The cows of Wall Street like it grass green. What do you think of FoundryCon? Yeah, that's really cool as well. So let me share this as well. Palantir is now doing a conference for Foundry. Let me open it up real quick. So let's look at that, and then we're gonna talk about Meta. So for the first time ever, FoundryCon is streaming live. Hear from U.S. Palantir customers: Jacobs, Morgan Stanley, military contract, military. Oh, I didn't even know Morgan Stanley works with Palantir. Tyson Foods, the NCI, APA Corp. So plus a chat with Mike Allen and Alex Karp. Again, more Karp. This is his 6th interview. Oh wow, it's streaming live on my birthday. That's super cool. My birthday's on Thursday. It's October 27th. So FoundryCon will be streaming. And that's the link. That's very cool. Palantir announces broadcast of flagship customer conference, FoundryCon. Let me tweet that right there. There we go. We'll do a breaking. And then let's put the emoji right there. And then let's write all this stuff. That's pretty cool. That's pretty cool. So basically, I think we're probably going to get a ton of information around what's going on. And we're going to be able to learn a lot more about what's going on with Foundry. And we're going to learn it from people that are actually in the, you know, in the in the world using Palantir Foundry, which is pretty cool. So there we go. That's out. Very cool stuff. Okay, markets don't look red to me. Yep. Well, markets were red in the pre-market, but markets are not red anymore. So the title of this video is now incorrect. All right, let me share this screen on Time to Get Fit by the letter by this guy. So this is really interesting for anyone who's thinking of Meta or anyone thinking of big tech as well. So a couple of things that are here. Look at this one. Meta stock is down 55% compared to an average of 19% for its big tech peers. That means Apple, Google, Microsoft, and Amazon are down 19% of the year. Meta's down 55. So it's like, okay, that's already like, what's so bad about Meta that's not bad about the other companies? PE ratio has fallen from 23 to 12. Now trades at less than half the average of PE of your peers. So, Google's and all of them trade above 50% above, or more than 50% above the PE average of Meta, which could mean that Meta is the cheapest stock on the market, right? But or at least the cheapest, biggest tech stock. Meta's core business is one of the largest and most profitable in the world, with over 45 billion in operating profits last year alone. That's all based on ads. To accomplish this goal, we recommend a 3-step plan that will, again, this is an open letter from Meta shareholders to Facebook, that will double free cash flow to 40 billion per year. They want to reduce headcount by 20%, which would only bring you back to mid 2021 levels. It's not like getting rid of 20% of employees is going to lead to some, 2015 level of employees. It's just going to be 2021. Reduce annual capex by at least 5 billion, from 30 billion to 25 billion, and limit investment in metaverse reality labs to no more than 5 billion a year. So they want the metaverse stuff to go. They're like, all right, you can keep doing this metaverse stuff, but don't spend more than 5 billion. If you're gonna, have this massive capex, you need to reduce it by at least 5 billion, and you need to reduce their headcount. And so what they said about employees is, why 20%? To put that in perspective, it really takes the company back to mid 2021 levels of employee expense. And I don't think anybody would argue that Meta wasn't sufficiently staffed in 2021 to tackle a business that looks similar to how it looks today. And that's very true. I mean, if you think about Meta, there's nothing in their business that has fundamentally changed that would require that many level of employees, right? There is a point where you think, okay, they just want to swallow up talent because they can afford to do it because they have so much cash, and stop, that talent from creating any products that would compete with them. Because if you create a competitor to Facebook, obviously that's more expensive for them to deal with than if they just give you $400,000 a year in salary. So it's a really interesting letter. I recommend reading it. I don't know if Zucks will actually care about it. But it does say the cumulative benefit of the recommended adjustments outlined above would increase free cash flow by at least 20 billion in 2023, 10 billion from people-related expense, 5 billion from capex, 5 billion from reduced metaverse spend. This would double annual free cash flow and put free cash flow as a percentage of revenue more in line with Google, Microsoft, Apple, obviously leading to the stock price probably doubling, or at least getting back to 200 over time. I thought it was a very interesting letter. It was interesting to see how a shareholder, an institutional shareholder, speaks to a CEO. It was interesting to see how they talk. Did you watch Shasta's video on Facebook and Snapchat yesterday? Very interesting. I did not. I can check it out though. I have not seen it. As much as everyone they hired, you would think the metaverse would be better. Yeah, the problem is the metaverse doesn't have mainstream adoption yet. And that's the other issue. It's like, if you're not going to get mainstream adoption yet, then, and you're spending $10 billion a year on it, it's like, maybe it's not the best, the best idea at this moment. And so that's kind of where it is right there. All right. Because we have Google's earnings coming up, let's look at a clip around Google's search and see how that is doing.
Right now is Paul Meeks. He's Independent Solutions Wealth Management Portfolio Manager. Paul, there's been a lot of talk about how far some of these tech stocks have come down. And as a result, there are people who are pretty eager to buy if they see any good news. You're kind of in a wait and see mode. You're not ready to jump in and buy just yet. What are you waiting to see?
I want to make sure that when these companies report, that they're not going to give guidance that makes me and other analysts, lower at least considerably, going forward revenue and EPS estimates. Because even though stocks may be cheap, you may say something like, hey, man, they're down 60, 70, 80%. they cannot rally, or they can't rally and hold those gains if we continue to lower estimates. So let's see. Let's clear the news cycle. There is absolutely no rush to engage. And afterwards, we'll reassess. I'm hoping to be pleasantly surprised, but I really think that there's going to be continued pressure here on almost all of the FANGs and the major tech companies.
Because you think it's not going to be possible to get any certainty into the future, or because you think they know what the future is and it's not going to be great?
I think that they're going to be, even though they may indicate that they're seeing some sort of turn, that they have some sort of confidence, I don't really think that even the best on their internal teams can really say that. And so we have to see what unravels with the recession and how recession sensitive are some of these companies. You have the digital advertisers like Alphabet and Meta that are obviously going to be more impacted. You have somebody like even Apple that is geared toward consumer electronics. We know that there's some trouble there. So let's just see what happens. Also, we want to see with the major tech companies, do we finally, after years and quarters of very aggressive growth in the cloud, do we start to see a deceleration? These cloud companies, AWS, at Amazon and Azure, at Microsoft and Google Cloud, they've been growing very nicely in their cloud business, and all the focus has been there. They've been growing every quarter for quite some time, 30, 40, 50%. If we start to see a deceleration, there could be some hell to pay.
Let's kind of split some of these companies.
Okay, I want to stop on this slide right here. So let's look at this. We have Apple, Amazon, Microsoft, Meta, 1.4 trillion combined in sales in 2021, 29% combined revenue growth, 10% combined revenue growth, Q3 2022 estimates. So at that point, if we're getting 10% revenue growth year over year on something like Google that did $70 billion in revenue, you might get what, 77 billion in the next quarter. But if they're talking about 10% year over year, that would still be 77, and that would be over year versus quarter over quarter, which is something that's going to be more likely. I personally, right, this is just my opinion, randomly putting it out there. If I had to pick which meet and miss, I think Amazon, Google, Microsoft, and Apple will either meet earnings or slightly miss or beat. And I think Google's the biggest candidate to beat. And I think Meta might miss, and they will get lower on their DAUs and MAUs, but maybe they meet slightly or beat a little bit on revenue. The reason I think Google is going to beat is because their cloud GCP went up 28% year over year last quarter. I don't think that's necessarily slowing down. I know it's not as big as Amazon or Azure, but I don't think it's slowing down. And if that's not slowing down, even if advertising slowed down on search, which, by the way, I don't think that's slowing down either. And I want to talk about advertising in a second after this video, because I think there's a lot of arguments for why digital ad spend might not be going down as massively for these companies. Then Google might have the best chance out of all of big tech for beating. But put in the comments, which of the big tech do you think actually beats earnings, and which one do you think misses badly? And we'll compare everyone's answers.
Companies out. They're not all created equally, and they're not all down equally. You can talk about how Microsoft is down by 26%, Alphabet down by 29%, but they look a heck of a lot better than somebody like Meta, who's down, what is it, more than 60% right now? How do you kind of look at these? Are you more interested in getting what you think could be a really great deal from a stock that's dropped significantly, or is there a reason that you'd be drawn to some of these stocks that haven't fallen as much because you think they have a better story?
I think the better stories are companies, and you see the ones that they're in line with the NASDAQ this year, maybe even outperforming, companies like Microsoft and Alphabet. A lot of people ask me about Alphabet and Meta. Paul, aren't they the same thing? Aren't they both digital advertising companies? Well, Alphabet is a little bit more resilient because they are search ads, whereas Meta is social media driven. And of course, Meta also is going through a wrenching change, going from their legacy business to the metaverse, whatever that may be. And so a company like Meta might be very intriguing because it's down the most, but it also has the squirreliest go forward business plan.
Let's talk about some energy stuff.
Okay, so big tech earnings are going to be interesting. I want to give a couple of thoughts here. So first of all, I think Google's going to beat, primarily because Snapchat to me is not an indicator for Meta and Google. All right, Snapchat has a really hard time monetizing. I think everyone already knows this because either you use it or you don't use it. And if you don't use it, that's probably one of the reasons they have a hard time monetizing. But their Discover page is like just not built to optimize for ads in a massive way, right? Obviously, they sold $1 billion worth of ads last quarter, but it's just not as big as Google being able to do, 80, what is it, like 40 billion or 50 billion, and Meta did 28 billion last quarter. Now, if that's the case, if you're an advertiser, right, even though we're in a recession, basically, right, you still need to advertise your products. It's not like you can't advertise your products. And so the question becomes, where are you going to advertise them? Where are you going to put them? You might reduce some of your spend, but I don't think you completely ignore Google or you completely ignore Facebook. You definitely don't ignore Facebook, because Facebook is not search-based advertising, which to me is actually better, which to me is not as good for a brand new advertiser, right? If you're selling t-shirts, you can't buy clicks on the word t-shirt. You're just never going to compete for that. But you can show a picture of your t-shirt on a home feed to millions of people instantly, or to at least hundreds of people instantly. At least test if your ad makes any sense. So whenever we talk about advertising going down from the macro, for Meta and Google, I always think they have the best ad platforms in the world. And like, yeah, maybe Chipotle stopped spending as much on ads, but like average regular people, if they still want to throw in a couple $100 and you multiply that by millions of people, it can at least get them to not miss on their revenue targets, in my opinion. And that's where I see their advertising part go. And then obviously we have Google and the cloud business that I think is going to be pretty good, given it was pretty good last quarter and there's no reason it would slow down. If that slows down and the guidance goes down for that, that would be a big surprise to investors, but I don't think that would necessarily be the case. Amit, how is Palantir going to be the next Google? Well, I don't think it's going to be the next Google. I think it's going to have its own little world in the B2B space. Google's more of a search-based consumer product company. But I think if they figure out how to monetize data and data analytics in the right way, then they have a chance to be a really big company. S&P hits 380. I want to share this article real quick that actually relates to Apple and Google. Apple 30%. There's a new thing that came out the other day, or like yesterday. Okay, I don't know if I'm going to be able to find it, but basically Apple is now asking for 30% of revenue from ads inside of the App Store. Meaning if you run like a promoted post through Facebook and you advertise right on the app, Apple wants to take 30% of that now, which is actually, insane. So that's another headwind for Facebook as we think about them. It's like Apple's just choking them by the throat. They're just like gobbling up so many different parts of them, which is why I think they shifted to the metaverse, because they realize that it's not sustainable to build their company on Apple's infrastructure if Apple's just going to kill them every single time. There's another thing I just saw. Instagram Reels are now as good as TikTok. Yeah, so here is another really important thing to think about. Instagram Reels are now becoming incredibly exciting to me as I've been using them, as I've been posting on the product. By the way, if you don't follow me, at it's Amit Kukreja, ITSAMITKUKREJA. I'm on Instagram. That content on Instagram is a little bit different than the content on YouTube, but it's interesting because the algorithm's getting better. What are Reels? Reels are just algorithmically trained pieces of content that come on your feed. And the reason TikTok had the advantage is because TikTok was the first person to do it. It's not because their AI was that much better than Meta's. Meta's just didn't even know, like it hit them on the, like, oh, that's how people want to see content. They don't care about their friends. They care about random strangers. And it's better for creator discovery, all that stuff. So Reels monetized. I was listening to the Q2 shareholders call yesterday at $1 billion. And it was quicker to monetize to get to the $1 billion revenue run rate versus Stories. Stories took them, I think, like at least 2 years to get to $1 billion. So at that point, if the performance in Reels has dramatically improved, the MAUs, DAUs has not gone down. They probably hit 29 billion of revenue, and the metaverse stuff is starting to look better. We could see investors feel more confident about Meta. The problem is I've also seen advertisers say that because of iOS 14.5, the tracking on Reels and ads in general sucks, and the ROI is not as good as it used to be. And because that's not the case, you've got something like TikTok having better targeting for the moment, and therefore it would be a little bit stronger. Shout out to Gus Herrera for the $4.99 super chat. That's so funny. I actually was watching a YouTuber yesterday. He's in Thailand, and I donated $5 to him. He commented on my videos like months ago, and I hadn't seen him in a while, and I saw that he was live, and I was like, oh, let me just say hi, and I gave him $5. So thank you for the super chat. It's really, really nice. Always makes someone's day, or creator's day, when they get a super chat. It's awesome. Damn, I'm stoked if you could talk about QuantumScape. Okay, I don't know that much about QuantumScape, so there's not that much I could talk about, to be honest. So I would have to do more research to effectively talk about QuantumScape. I do know it's a really cool thing. It's a cool technology, but I just don't know enough to really talk about that. Let's see this guy talk about Snapchat in relationship to Meta and Facebook, kind of the conversation we were just having right now.
Is very much a focus this week, and it has a lot of sway on markets. What are your expectations? Will big technology be at least a way for us to find a catalyst to slow down the selling?
Well, thanks a lot, Dom. A couple of things come to mind, right? I think a lot of folks were discouraged by what Snap reported last week in terms of an indication that the online advertising market not only continues to be weak, but continues to have a variety of different challenges from a growth perspective. That being said, experts that we talk to suggest that because Snap is so oriented to large brand advertisers, they might not necessarily be as indicative of a company and its performance as, say, companies like Alphabet and Meta might communicate over the course of this week.
So Scott, when we refer specifically to companies like Alphabet and Meta, there's got to be at least a moment of pause, right? After Snap results earlier on, it calls into question a little bit about whether or not there is still going to be appetite for spending on digital advertising from big corporations. Is that a concern in your mind? We heard earlier this week, Bank of America analysts downgrade Meta stock because of some concerns about that digital advertising spending outlook. What do you think? Are people still going to spend on advertising?
Yeah, I think if you look at the digital advertising market right now, there's still spending taking place. Obviously, we have the holiday shopping season coming up, which is critical for a variety of companies. I think what's important to understand, though, is that Snap is very different in terms of its profile than a lot of the big tech companies that are focused on online advertising. So you think about an Alphabet / Google / YouTube. Based on conversations that we've had, they are much more economically, let's call it, insensitive to kind of what's going on more broadly. They are a measure of overall intent when it comes to buying goods and services, for example. And so it's reasonable to think that Alphabet is going to perform better than Snap. Now, Meta is a slightly different story. I think a lot of people are looking at that company and asking themselves whether or not the commitment that they've made to the metaverse right now makes very much sense. If you think about the amount of spending and you think about the lack of return that the company is expecting over the next number of years. And so I think, and this was referenced, I think, in the lead-in, that these companies are going to have to communicate some sense of austerity when it comes to their spending plans. Snap has done that. Other companies have indicated that, and we'll see those details over the course of the week.
Scott, we've just got a few moments left here. I'd like to ask you about Apple because it's the biggest weighting in a lot of these indices out there and fund weightings as well. Is Apple, does it deserve to be the safe haven stock that it has been on a relative basis over the past 15 years?
Well, Dom, to think about Apple is to think about a company that is broadly based and has a very strong balance sheet, and people are not necessarily stepping away from the products and services just because of the high and maybe increasing prices. That is a headwind, but keep in mind that they have tailwinds related to new products and the holiday shopping season. So it seems like Apple is pretty well positioned. But again, the key thing for Apple is, of course, those new iPhone sales and how those are holding up. Right now, indications have been mixed, but Apple seems to always confound the doubters when they report results, especially given a lot of reports coming out about volumes being cut, which often, frankly, are incorrect.
So pretty much the same argument, right? That Snapchat has a fundamentally different business model in terms of their advertising infrastructure. Dan says, Amit, do you know the story behind today's rally? Well, if I had to guess, I think there would be a couple things. I think the market is excited for earnings. Netflix proved that growth is still possible. Snapchat proved it's not, but Snapchat's just not in the same league as some of the other big tech companies. So I think the market's baking in that earnings are going to be decent. The market's also baked in 75 basis points from November, we know it's going to happen because we know markets are forward looking. We don't care that much anymore. Inflation, I guess the market is estimating that it's not going to be horrible in November. And if it's not going to be horrible in November, then that means we should begin to take off after the midterm elections. I also think the market might be expecting Republicans win in the House and the Senate. That's like my wild card theory here. If Republicans win in the House and the Senate, maybe we get a little bit more fiscally conservative with spending, because we're not able to pass like major bills, and as a like with spending, and as a result of that, maybe I don't know, maybe that helps around inflation. We have reduced the deficit by like $1 trillion, which is not that bad, but nonetheless, I would imagine that's what the market is kind of thinking. We got another super chat by Trading with a Dummy. Here's another couple of bucks for your hard work every morning. Peace out. I got to get to real work now. Haha. Talk to you later. Palantir sucks. My interview with Trading with a Dummy, I think, is dropping today at 6 p.m. So when it goes out, I'll share it on Twitter. If you're not following me on Twitter at @AmitIsInvesting, I'll also share it on my community feed. So thank you for trading for a dummy. I appreciate that. I hope you enjoy real work. I know you're real work, and you make some good money at real work. So hope you enjoy that. And yeah, that interview was fun. I got to take a look at it the other day. So hope everyone enjoys it. Farzad in the chat, get it, Amit. Thank you, Farzad. I appreciate you being here. Yo, Farzad did the nicest thing yesterday. Yeah, I have to show it real quick. He shouted out my startup, which is in the description, by the way, if you have not checked it out, in his video. And, I didn't tell him to do that or anything like that. It was just a really nice thing. And, his video, it got 14,000 views. So 14,000 people got at least a hint of what Idea is, which is just so nice, man. It's like absolutely crazy. Here's what he said right here.
Wow. Okay. All my content is also available in audio format on audia.io. Go to the website or download the app. All right, welcome in, everybody.
That was super awesome, man. That was super great. So I appreciate that. That was awesome. He also has a new merch store. And I don't know if you guys are fans of Farzad. If you know about his channel, big Tesla community channel. And I ordered some merch, and oh my God, I cannot wait to the shirt I wear live on this stream, because that shirt was a hell of a shirt. I gotta show you guys that shirt real quick. But we're gonna keep going, and we're gonna get into it. Let me just pull this up real quick. But awesome stuff. So yeah, it's gonna be interesting to see what happens with Meta and with Facebook. It's going to be very, very interesting to see how it plays out. I think Meta's earnings are tomorrow, so I probably be streaming that live. Am I? We'll see. I might be streaming that live. And we're going to talk a bit more on where that is. So let me share this real quick. Yeah, I saw that and got really excited. Farzad is awesome. Thank you, Miyoko, for being here. So real quick, this is the shirt I ordered. Where is it? This is the shirt I ordered. So this is farzadmesabi.com/merch. This is gonna be my my Christmas sweater. Yeah, I think when I wear it, because my mom usually has a party during Christmas because her birthday's near that time. She's gonna be like, "What the fuck is this?" I'm like, "Mom, it's like the Persian Santa Claus. That's what I'm doing." Okay. Hold on, we got a guest calling in. We got Mr. Tom Nash. Let me pick this up. I'm on stream, my guy.
How many viewers we got?
We got 204 people.
Damn, that's good numbers.
Yeah, it's not bad. I didn't clickbait or anything, so it's cool. It's dope.
They're coming for you.
They're coming for me.
To shamelessly promote our podcast today at 4 p.m.
Well, it's not today. It's tomorrow, though. We're doing it.
Sorry. Yes.
Yeah.
Tomorrow. Yes, tomorrow. We're doing this tomorrow at 4 p.m. and it's going to have a very interesting surprise. We've talked about, but we won't tell people what the surprise is, but it's going to be a banger of a surprise.
So should the title of the podcast just be "It's a Surprise"?
No, you don't get to title the podcast. We've talked about it.
Last time I titled it "Hi, we're back."
Amit just made something.
Amit just made something. That was the day I launched my startup. I was like, Amit made something.
Amit made something. Hey, I wanted to ask you a quick question.
Wait, real quick. David in the chat said, I haven't heard from Tom in a while. Ask where he has been.
What do you mean, David in the chat? I've been posting videos almost daily. What the fuck is he talking about?
Oh, I guess he's not getting the notifications then. Okay. All right. What's your question?
That's YouTube. That's the YouTube algorithm for you, bro.
Yeah.
David, just go to my main channel and you'll see all my videos and you probably can binge watch everything you missed for the past month. I will. If you send me proof of viewership, I'll send them over to your house to perform some massage. Hey, I wanted to tell your stream a little joke.
Okay.
Remember I told you yesterday I saw this funny TikTok before I let you go?
Yeah.
Of a nurse explaining that the average male, if he loses 35 pounds, it adds an inch to his. And then you see a guy running on the treadmill like a maniac, like trying to lose weight.
Yes.
So yeah, that was the whoever wrote this joke should be fired. Anyways, I just called to say I love you. Have a great stream, buddy. And I'll see you tomorrow at 4 p.m. for our new and revamped podcast, which I'm really excited about.
Yes, 4 p.m. is going to be really excited. We have a big announcement. Real quick before you go, Google, Microsoft, Amazon, Meta, Apple have earnings. Can you give me a beat or miss on all of them? I'm going to name one and then just tell me beat or miss. Okay?
I don't know about the beat or the miss or the beat, but I'll tell you what. I don't know. Nobody knows the projections, but I'll tell you something else. Based on what you see in the earnings, you're going to find out a lot about the macroeconomic. Sorry about that. So I said it yesterday, and I'm going to repeat it today. Specifically, Google and specifically Apple are the perfect barometers of the consumer market, because one sells very expensive value-based phones that are definitely not the cheap option, and the other sells advertising, a B2C advertising. Those are the two industries that will show you the fastest how good or bad the market is. So what I'm looking for is I want to see Apple iPhone sales, and within the Google reports, I'm going to be focusing on ad revenue for YouTube to see exactly what's going on. And I have a hunch, as far as YouTube goes and Google goes, that we're going to see a decline in ad revenue for Google.
Okay.
Those two are really like the most interesting ones to look at as far as where the market is headed.
Right. Yeah, especially in the B2C advertising space. Yeah.
Yes, B2C advertising is like the first thing to cut. If you're a CEO of a company, what's the first thing you slash? It's like, okay, let's spend less on ads.
Yeah. Yeah.
We've seen it happen in real time. You remember what happened with the FTX and tape pranks? We talked about it multiple times, right?
Yeah. Okay. Cool. So it's gonna be exciting. Well,
and also you and I have a glimpse into the AdSense situation. And the CPM has been declining over the past 6 months, which is completely irrelevant of viewership. It's just basically cost per view.
Yeah, it's just what they're willing to pay.
Views, doesn't matter.
Yeah.
Yeah, so the CPM is basically coming down. So I suspect Google, at least not at Google entirely, because they have a lot of businesses that's unrelated. Like, they have the cloud business, they have a lot of stuff they're doing. But specifically for YouTube, I see a miss for the YouTube part.
Yeah, I think YouTube definitely is misses. I think Google overall does well because of the cloud part of their business.
Same thing with Amazon. The cloud is such a great business, bro.
Yeah.
Yeah, Apple might miss also. If not this quarter, next quarter.
Okay, before you leave, there's one comment I gotta read from Eeyore was right. He says, prediction, amidst going back to money talks.
Even better.
Even better. Even better.
Even better. I'm not kidding, bro. This is not clickbait. Even better.
This is good. This is really good.
Yes. Hold on. I think the cops are at the. You remember the song from what is his name? J. Cole? The cops are at the door.
The neighbors. Yeah.
Neighbors. Okay. Later, boy.
Later. Bye. All right, yeah, we do have a dope announcement coming out tomorrow. I want to take out one quick look at the market. So Wednesday, if you type in "Can you learn to speak, my guy" on YouTube, that's our channel name. And we have a little bit of announcement tomorrow at 4 p.m. So it'll be dope. Okay, so the market's green. Meta is 133. So Tom thinks advertising is going to go down, which is why these guys are going to miss. I think that the cloud may save some of them. Meta, I think overall if they don't beat, they don't miss badly. They would be a slight miss. I think Meta, what matters is DAU, MAU. That's all that matters. Like Rev could be down a couple 100 million, but if they at least kept the engagement or increased it, they're going to show that they can deal with TikTok, that TikTok's not just eating their lunch at every second. There's a couple of other social apps that are getting pretty big right now as well, called Gas and Be Real. I don't know if you guys have heard of them. Very popular with teenagers. So those are also things to think about as Meta ends up, doing what it needs to do. So we will see. If Mick goes back to money talks, then I'll watch it again. We have some exciting news. We'll let you guys know. We'll let you know. All right. Thank you everybody so much for watching. I appreciate you guys. I'll see you guys a little bit later throughout the day. Some more videos coming out. 186 of you means the world to me. Check out the link in the description. My startup would appreciate everyone signing up and giving me some feedback on it as we're growing and changing up and really beginning to build out the infrastructure of our app. And yeah, thank you guys so much for watching. Really excited for earnings. Going to be covering it the entire week. I think it really starts with big tech, and we're going to see how it comes out. I think Coca-Cola had earnings today. I didn't cover it, but I think they did fine. But big tech earnings are going to be pretty interesting. So thank you all for doing this. Thank you all for being here. Scott, Miyoko, thank you for being here. Michael, I will see you guys later throughout the day. Bye-bye.